If you waited on official settlements again last night, you weren't alone. For the second straight day, CME settlement prices were finalized by early evening, and that's forcing more market watchers to adjust how they talk about yesterday's trade. So what did the markets actually do yesterday, and what should you be watching next? Let's get into it. Good morning. Welcome to Boots and Bushels, your daily look at the markets that feed America. We've got grains, livestock, energy, weather, and some important ag news to break down today, so let's start where we always do, with the grain markets. March corn was trading near 4:30 late Thursday. Corn spent most of the session chopping sideways as traders weighed steady domestic demand against a lack of fresh bullish news. Export pace remains respectable, but without a new catalyst, the market continues to hover near recent ranges. March soybeans were trading near 1071 into the evening. Beans felt modest pressures during the day as South America harvest activity continues, but uneven rainfall across parts of Brazil is still keeping sellers cautious. That weather uncertainty is helping limit downside, even as global supplies remain large. March Chicago wheat was trading near 541 late in the session. Wheat continues to face stiff competition from the global market, but prices held together today as traders keep an eye on plains weather and export competitiveness. April live cattle were trading near 237 late Thursday. The cattle market remains well supported by tight supplies and firm cash expectations, even as futures showed some weakness during the session. With herd rebuilding still moving slowly, the longer-term supply story continues to favor cattle prices. March feeder cattle were trading near 365 into the close. Feeders remain sensitive to feed cost and broader cattle sentiment, but overall fundamentals continue to underpin the market. April lean hogs were trading near 95.30 late in the day. Hog futures remain choppy as traders balance near-term demand concerns against tightening hog numbers projected later this year. March crude oil was trading near 65.17 a barrel late Thursday. Oil slipped modestly during the session but remains supported by broader energy fundamentals and ongoing geopolitical uncertainty. Energy prices continue to play a role in the overall commodity inflation picture. In the weather across much of the Midwest remains relatively quiet over the next several days, which should allow transportation and grain movement to continue without major disruptions. Attention remains on the plains, where the colder temperatures should stress winter wheat in areas lacking snow cover. While no widespread damage is confirmed at this point, this is a developing story, and the wheat market will continue to watch closely. In South America, Brazil remains a key focus. Uneven rainfall patterns continue across major growing regions, with some areas seeing excessive moisture while others trend drier. That variability is keeping uncertainty in final soybean yield estimates as harvest progresses. In the ag news, first, the USDA continues to report steady but unspectacular export demand for U.S. corn. Sales have been consistent enough to keep prices supported, but not strong enough yet to push the market out of this sideways pattern. Traders are watching closely to see if global buyers increase purchases as South America crop quality becomes clearer. Second, South American soybean production remains a moving target. While Brazil is still expected to produce a large crop overall, analysts continue to trim yield expectations in pockets where weather issues persist. That uncertainty is one reason beans are struggling to break lower despite harvest pressure. Third, on the livestock side, tight U.S. cattle supplies remain the dominant long-term story. Herd rebuilding remains slow, and that continues to support both live and feeder cattle markets. Even modest demand strength can have outsized impact in a supply-constrained environment. Finally, broader macroeconomic factors are creeping back into focus. Energy prices, inflation expectations, and interest rate outlooks could all influence commodity markets as we head into February, keeping traders cautious across grains, livestock, and energy. Markets today were largely in a wait-and-see mode, with futures trading near key levels as traders look ahead to export demand, weather developments, and the next round of data. These prices reflect late session trade and gives a solid snapshot of where markets are heading into the next session. Thank you for spending your morning with me. This has been Boots and Bushels, your daily look at the markets that feed America.